The stock market had some pretty big down days this past week, but there is a way to make money in that environment, even by buying. I will show you how. Plus, I'll do my regular weekly market analysis. We'll look at the day trade of the week on EYES, and we'll do a market scan in search of opportunity. So how do you profit during a stock market crash? Or at least, how do you profit by buying during a stock market crash? Well, in order to answer that question, you have to understand something called alpha and beta. So alpha and beta are the correlations that stocks have to the overall market. The beta is the how the stock moves relative to the market. So if the market moves up 1%, a stock with a beta of 2 goes up 2%. The alpha component is the movement in the stock price that is related to the stock itself. So if a market is dropping 300 points, but a biotech company announces that they've found a cure for some disease, even though the market's moving down, that stock is going to go up because of the alpha component. And what's really important is when you have a crashing market that's moving down some multiple of hundreds of Dow points like we had last week, you need to focus on alpha stocks. And alpha stocks are pretty easy to find if you have the right tools. They're characterized by abnormal volume and abnormal price movement. And what I like to do when the market is really in a downward trend or showing a lot of uncertainty like we've had the last couple of weeks is focus in on those very few stocks that are trading with massive volume and abnormal volume. So high liquidity and very abnormal volume. Now there's two ways that I find these. One is I use a program called TradeStation, which allows me to write my own indicators. And I've written an indicator that looks for abnormal market action and high liquidity stocks trading very actively. And then I've also got a tool on the Stockscores website called the Stockscores Market Scan, which will do the same thing. You can set it to find stocks that are trading with abnormal volume and high liquidity. Now, I kind of talked about that last week as a way to find stocks to day trade, but let me show you how that active live screen looks. This is, again, a service that we run that I run every day. I start when the market opens. I talk for the opening half an hour. And you are watching my screen where I've got a number of different windows. And the one that's sort of most important when the market's in correction mode is this window over here, which we call the wave window. And the wave window considers stocks that are very, very liquid. So this is the number of trades column right here. These are stocks that are trading with high liquidity. So for example, EYES traded over 2 million times. Now that's not 2 million shares, that's over 2 million trades. ExxonMobil traded 365,000 trades on Friday. Now the other characteristic that we need to look at is how abnormal the volume is. It's one thing to be very liquid, but if it's trading 500,000 times a day and it does that every day, like a Tesla would or an Apple would, that's great. It means we can move in and out of them very easily. But what we want is those stocks that are also trading very abnormal volume. So they're trading much more volume than they would normally trade. And we can do that with TradeStation. We can just look at the chart and see if it looks like abnormal volume. I'm going to show you a chart in the moment. But we can also use the Stockscores website for this. And for those of you that are members of Stockscores, just build a very simple scan that says find all the stocks that are trading abnormal volume and then set a minimum number of trades, like 200,000. And you might want to, if you're focused on buying stocks, also focus on those stocks that are maybe up for the day. So you could add a gain-loss filter right here, stocks that are up at least 1% over the last one day. You could set that to 10%, whatever you like. And run the market scan. We're going to get a relatively short list of stocks that meet those criteria. Now, we can do that in TradeStation, we can do that in Stockscores, we can do that in real time. Stockscores is delayed. The tool that you use will depend a lot on the kind of trading that you're doing. Now what I'm going to do is show you the chart of EYES and how I might trade that stock as the day wore on. So you can see here that EYES was a stock that was trading, over 2 million times, and early in the day it was trading a few 100,000 times already. But what should stand out is how abnormal the volume is. There's your normal volume, there's your volume on Friday, and there's normal volume. I mean, it's not even showing up for the previous day. This is a 1 minute chart on EYES. And that's what I like to focus on when these stocks are trading abnormally with lots of volume. Remember, the market was, or at least started the day and moved down quite a bit early in the day on Friday, and yet this stock was able to move up. Why? Because it is an alpha stock. It's trading on its own story. And then what we look for are things like action candles. So our day trader strategy looks for those action candles. We also have a strategy called a pullback play, where we look for that little flag pattern and the break of the flag. There's another one here. We have a strategy called a superhero strategy that looks for breaks from predictive patterns like an ascending triangle. So we had a number of buy signals, and I'll talk about these at the end of the video as well, because our day trade of the day on Friday was this stock using the day trader strategy. But what I want you to sort of understand is that there's a number of strategies that I teach that all look at trading these highly liquid, abnormal volume stocks. And even on a bad day in the market, there's always a couple of these stocks that are moving sharply higher, ripping higher, because the crowd has gathered around the story. And what the market does doesn't matter for those stocks. Most stocks move with the market. We call those beta stocks. What you want to trade on those bad market days are the alpha stocks, looking for abnormal volume with tools like Active Live or the Stockscores Market Scan is the best way to do it. All right, let's get into our normal weekly market analysis, starting off with the US markets. And you can see that we've had lots of volatility of late, the last couple of weeks. Here's your normal volatility, pretty quiet. And look at how the waves have been getting bigger and bigger. And that means uncertainty is increasing. We are in a situation of falling tops, which is a sign of pessimism. We got really oversold on Thursday. And how do we know it's oversold? Because the distance from the trend line down to where price was quite far. See how far that was? It's like over here we had quite a distance down to where price was relative to the trend line. That's an oversold condition. When you get really oversold like that, you're likely to get a bounce back. And we had the bounce back on Friday, but we have not yet broken the downward trend line. So what happened on Friday is encouraging, but we're not out of the woods yet. And we've talked a little bit about market crashes in recent weeks, and we've certainly had some volatility to the downside, and I expect we will see some more volatility. And that's why I want to focus on those alpha stocks in this environment, only trading, a few stocks a day, because that's the best way to make money when the market is this volatile. You don't want to try to fight the market. You want to focus on those stocks that don't care about the market, and those are the alpha names. All right, moving along. Here is the weekly chart of the SPY, and even though we've had lots of volatility, in the context of this weekly chart, it doesn't really look all that bad. Now, during the week, like Thursday morning, Thursday afternoon, we were below the upward trend line on the weekly. But the market managed to come back on Friday and has still remained above the upward trend line. And so we have not received a long-term sell signal yet, because the upward trend line is intact. Now, there are concerns because we do have the pace of rising bottoms is shallower than the pace of rising bottoms is steeper than the pace of rising tops. That's called a wedge pattern. And that just means that the buyers are losing their enthusiasm. And we did go through the trend line through the week. We managed to come back before the end of the week. That's a positive sign, but I think you still want to have some caution. Now, if we look at the NASDAQ 100, this is a place where we've seen more profit taking because it's also a place where some of the best performers were. And with stocks like Tesla and Amazon pulling back, we had a sharper pullback on the NASDAQ 100 than we did on the S&P 500. However, we hit a new low on Friday and we came right back to close above the open, and well off of the lows. And look at how volume has been increasing. So it's actually a good sign what happened on Friday. And I think that we may see those NASDAQ stocks make a little bounce back next week. If you go look at a chart of a stock like Tesla, for example, it's had a pretty good correction, if you will, the last few weeks, but it's actually come back to its linear trend line. If you were to look at the chart of Tesla, just go look at it. It was way up here a few weeks ago. It's pulled back a lot, and it's come back to its linear trend line where it's likely to bounce. And I think that's one of the things that has supported the NASDAQ at the end of the day on Friday, is just the fact that many of these stocks have corrected quite a bit over the last few weeks, and they're now reversing that weakness and starting to resume their upward trend. I don't think you can call the market out of the woods yet. Certainly there is still lots of risk for a correction, but it looks better given the way the market behaved on Friday. All right, the Russell 2000 also had some profit taking after being in a nice upward trend for some time. It did break the upward trend line, but again, it also managed to close above its open on Friday, well off of the lows, kind of bouncing off of this horizontal support zone with some really strong volume. You often get that emotional release. It was like some panic selling Friday morning. It shakes out the weak holders of stocks, leaving those who are really committed to the stock for the long term. And that's why so far it looks pretty good for a better week next week than we had last week. All right, let's move on to the Canadian markets. And here you have the TSX on the short-term chart, 30-day, 60-minute, and our downward trend line, something like that. We managed to break it, coming into some resistance here, but again, coming back well off of the lows, off of support. So it looks better. I call this sort of neutral right now. The longer-term chart, still in that upward trend. We had a couple of maybe 2 or 3 weeks of weakness, and we've looking on the Canadian side like a resumption of the strength. Now you might wonder, why does the Canadian market not show the weakness that something like the NASDAQ showed? And the reason is there's a heavy contingent of oil and gas stocks on the Canadian market. And of course, oil has been really doing well lately. We've had that bullish rating on the oil market for a number of weeks, and that kind of shows up in the Canadian market, which has performed better the last little while. All right, where we have seen some sharp profit taking is in the TSX Venture. This is the microcap market in Canada, and it got a little bit overextended. The chart went parabolic. We talked about that the last couple of weeks. We broke the parabolic trend, and the question is, have we broken the linear trend? Well, I can draw that linear trend line from the start of the trend across the first pullback, and you can see that we just dipped below it but managed to come back on Friday. So this market maybe is a little oversold, due for a little bit of a bounce back, but I do think it's going to quiet down a little bit. Some of those cannabis stocks that helped this market recover tried to rebound a little bit last week as well, but did so on light volume, and they kind of failed. And so I'm not super optimistic about that cannabis sector, because the bounce back that started in the morning failed, and the volume wasn't strong there. There wasn't that alpha volume, that abnormal volume that I talked about at the top of the video. These are all the things that I teach in the Active Live courses, or even the investor courses on Stockscores. You can review the trader training area of the Stockscores website to learn more about that. This is all online. You can do the courses at any time at your leisure. I'm there to help you. I'm your teacher, and so you email me with your questions. Check that out if you have an interest. Anyway, let's move along with the video onto currencies. And the US dollar here, breaking this downward trend line and starting to build rising bottoms. So I'm starting to see a little bit of optimism building in the US dollar, which has been a pretty bad place to be. Now I'm Canadian. I may move some of my Canadian dollars into the US dollar here because of how this chart looks. I don't think I'll go wholeheartedly into that trade yet, but I will start to transfer some money to take advantage of the US dollar starting to show some strength. Looking at Bitcoin, this is an example of a chart that goes parabolic and pulls back to its linear trend line. So we'll draw the linear trend line, something like that. It runs away, it pulls back. It ran away, it pulled back, and it got close to that linear trend line, and also managed to close above its open on Friday. It's not a perfect situation because it didn't come all the way back to the trend line, but it does look certainly like it's trying to make a bounce after the profit taking of the last couple of weeks. So if you like to trade the Bitcoin or any of the e-currencies, there is some indication there that we're starting to see a bounce. All right, moving along to commodities, and here we have the chart of gold. I've been sort of negative on gold for a while, and you can see that we're building falling tops on gold. We've broken that upward trend line. We could draw the upward trend line like this as well, in which case we're still holding it, but I am relatively negative on gold right now until we start to see a break of this downward trend that's been in place since the summer. I wouldn't get too optimistic about gold. Now, oil is the exact opposite. It's been moving nicely to the upside. We've sort of going a little bit parabolic. You can see the trend getting steeper. No sign of weakness yet. I do think that oil is getting a little extended. It's coming into this resistance zone. It's got a little bit more upside. This is the ETF, of course. A little bit more upside until it gets into that zone, but I don't think you want to be chasing oil here. But many of the energy stocks are showing some decent charts, and that's one area where we're seeing the beta component, the market correlation, where the energy sector is good and therefore energy stocks in general have some decent prospects. If the chart on the energy stock that you're looking at is decent, then you're also getting the help from the overall energy market. All right, moving along, here is our fear chart. And this is one that I found really interesting because even though the market had some big down moves last week, we didn't have a lot of money moving into the VXX, into the insurance that many traders like to do with these volatility ETNs. And you can see just a very small spike here in the price of VXX. And it was kind of a sign that there wasn't a lot of fear in the market, even though we were getting some fairly significant profit taking in some stocks. And I think that's a good sign for the overall market. So my ratings then, bullish short-term bullish long-term on US and Canadian stocks, neutral short-term because we're still trying to deal with those short-term, 2-week downward trends. Gold, neutral long-term, bearish short-term, and oil, bullish on both time frames. The markets have gone through a period of profit taking, which has brought some uncertainty, lots of volatility. And while there's concerns about rising interest rates, we've seen that in the bond market, and that's really been the blame for the market weakness. I really think this was simply a reason for people to take some money off the table and bring on that short pullback that we've had. Now, in many cases, prices are now at the upward trend line, and they should hold there. We'll watch that very closely next week. Gold is relatively weak. I would generally avoid it until it can start to build some rising bottoms. Oil is strong, but getting a little extended, a little emotional with that strength, and fear is relatively low. All right, now we're going to talk about the day trade of the week, and we're going to move back to the chart that we talked about at the start. It was one of the hottest, it was the hottest stock on Friday, and it gave lots of trading opportunities as I showed. And if we use the 2-minute chart, we can actually look for that action candle that I talk about virtually every weekend with this video. Action candles are my secret sauce. They are the indicator that I use to find alpha. And every day we run algorithms on the entire US stock market in the Stockscores Active Live service. You can watch the same screen that I watch to find my trading opportunities. So I'm watching that screen. You can watch it remotely through a webinar. And when we see something like EYES make the action candle right here is the little pink dot, that tells us that there's life. Now notice the abnormal volume. That's that characteristic of alpha. And then we start having those pullback breaks. And then we have a breakout from an ascending triangle and another one. There's all these cues here to be buying that stock until the stock finally goes parabolic. When stocks go parabolic like that, one of the things I teach to look for is something called a bursting bubble candle. When you have a parabolic trend, you hit a new high, and you close below the open on something like the 2-minute chart, it's a sign that there's going to be a pullback. And that's exactly what happened right there. You had that bursting bubble candle. So if we use that as our exit point, for every $100 of risk that you wanted to take on this trade, you would buy 430 shares. That was a $1,015 position. You can't margin this stock because it was too low priced. So you're going to put up $1,015 to take $100 of risk. If you want to take $200 of risk, then you buy double the shares, $2,030 position. And at that exit signal, it had moved 25 times its risk. That's what RR means, reward for risk. So that was a $2,500 gain for every $1,015 put into the stock, a 245% return in a day when the market really wasn't all that great, in a market that has felt very pessimistic, very uncertain, and yet here's a stock on the buy side that had a great move. And that's one of the exciting things about alpha stocks. All right, let's now jump into the Stockscores Market Scan, and I'll just walk you through the process for identifying longer term trades using this tool. So I'm going to jump over to the market scan, and we're going to run one of the preset scans. We will run the Abnormal Breaks US scan, and let's see if there's any stocks that meet the criteria. Now we've got 164 candidates. That to me is too many to look at, so I'm going to narrow down my search. I'm going to go back to the market scan. I'm going to select Abnormal Breaks US, but we can add in other filters. So I could say I only want to look for stocks between $1 and $20, add in that filter. And I can also say I want more liquidity. I want stocks that have had a number of trades of at least 5,000 trades a day. So I'm just increasing or restricting the criteria a little more. And now there's only 11 stocks. So you can see how you can take a preset scan and manipulate it a little bit more to zero in on the area that you are most interested in. Now, the next step, of course, is to review those charts. So we just jump into the what's called the gallery viewer, and it's going to give us, 10 charts per page. And what we're looking for are stocks that are breaking from low volatility. So if we use this as an example, it is not breaking from low volatility on Friday. It had abnormal volume, it had abnormal price action, but its break from a predictive pattern was back here. And so it's too late at this point. It's a good hold. It was actually a good stock to day trade the last couple of days, and we actually did play that stock a little bit in Active Live on Thursday and Friday. But what I'm looking for here are those longer term trades. We're not talking about day trades. We're talking about position trades or maybe even swing trades. And I'm looking on the daily chart for those breaks from low volatility with abnormal activity. And I may go through these 16 stocks and not find a good pattern, or I guess it was 11 stocks, and I don't. Like this one, it's got the abnormal volume, it's got abnormal price action. The problem is it's coming into resistance, and it is going to get stuck at that point most likely. The volume also wasn't that abnormal. So here's a stock that's got some potential, some promise, but it's not really good enough. And these are, again, skills that I teach mostly in the investor course for looking at these longer term trades. If you want to be a day trader, you do the active trader course. And again, it's all online. You get my support via email. Check that out if you have an interest. If you enjoyed this video, if you found it informative, please click on that like button, subscribe to the channel, tell your friends about it, and most importantly, trade well.